What's up? What's up? What's up? My mind your money business peeps. It's me yet again on this fresh morning. It is Tuesday morning here on the lovely island of Guam. But is it it's a little after 4 p.m. Monday Eastern Standard Time. The stock market just closed. And today I'm giving a review on the stock market. It is the 1st of October here, but it's the 30th of September, in the mainlands currently, and the stock market just closed. And the stock market, it ended pretty strong. This is a different month. You remember I talked about in the last video the September effect and how the stock market over time during the month of September has not been good. It's been volatile a lot. And this month was a little different. It says here Dow S&P 500 hit fresh records to cap strong September quarter. So if you're not in the stock market at this time, it sucks for you, because there's a lot of money to be made. There's a lot of money going into the stock market. We're just in a interesting time, right? So investing is important. So let's see what the professionals have to say. I'm not a professional. I'm not a financial advisor or financial planner. I'm just simply someone who created a YouTube channel to voice my opinions, do my own research, and talk about those things that I find interesting pertaining to stock, finances, things of that nature, right? So if you're looking for someone to help you invest your money, please contact a financial advisor, or do like I do. Do your own research and then take action. Where your attention flows, that's where you take action. And if your attention is not flowing anywhere, then you're still sitting on the sidelines doing nothing. All right, so it says here, U.S. stocks bid farewell to the month and the quarter with fresh records as investors reacted to Fed Reserve Chair Jerome Powell vowing to do what it takes to keep the economy humming, while signaling he won't rush future rate cuts. Again, the Feds are meeting in November and again in December. So, what does he mean by that? He's not going to cut rates again this year? Who knows? Okay. The S&P 500 rose 0.4% to close at a new record, while the NASDAQ composite gained close to 0.4%. Meanwhile, the Dow Jones Industrial Average finished just above the flat line, securing its latest all-time high. Keyword, high. Even though the stock market has been, topsy-turvy over the last few years, it has been on the steady incline, people. This strategy, this thing we call the stock market, investments, was created to continue those with money to make money, to have your money work for you. It's like I was talking to someone, I even said it in another video, why do we work so hard for money just to put it in the bank and let it sit still? Why do you work so hard for something and then you let it sit in a bank and do nothing for you? Your money should be working for you, not in the form of like creating more and more debt, so you're working hard for your money to pay off debt, even though that's how we're rushed through the system. Work, create debt, work, pay off debt, and then you get to the end of your lifespan, or close to the end, and you realize you have nothing. And because you did not make the right decisions, then we become victims. It's not your fault that you don't have enough money. It's not your fault the prices of things are increasing and you can't afford them because you don't have the money saved or invested to take care of yourself. It's somebody else's fault. Either way, yeah, let's get back to the article. It says, typically the cruelest month for stocks. Wall Street indexes recorded monthly wins to close out the last trading day of September. I just said that. September is known to be a very volatile month, but not this month in 2024. Notably, the S&P 500 notched its best year-to-date performance at September's end since 1997. Do you know how long ago that was? Gee, Louise. Look, I was trying to add it in my head. But that was 27 years ago. Okay, the S&P also enjoyed its best quarter since the fourth quarter of 2021. That was 3 years ago. Right? Over the past 3 months, the Dow led the major indexes, gained up 8.2%. The S&P gained 5.4%, and the Nasdaq added nearly 3%. Now, while some stock prices went down today, like Tesla actually gained today. Is that real? Because, okay, so I woke up a couple hours ago around 4 something, and I saw the prices of some stocks down, and it looks like it changed at the last minute. Like Nvidia was down like $1 or something, but it actually is up 4 cents. I'll take that. 4 cents is good. It's green. I remember looking and Tesla was down, but Tesla bounced back as well since 4 o'clock this morning. So that was like a little over 2 hours ago. And Tesla rose. It's over $1.17. I'll take that. What if you own hundreds or thousands of that stock and it just grew by $1 today? You just made hundreds or you made thousands of dollars, and some people made millions. Oh, wow. SPLG was also down this morning when I checked it. It was like down 90 cents. But it flipped at the very end and it's over, it gained 28 cents. If you own hundreds and thousands of these shares, that's going to be hundreds and thousands, and for some investors, millions of dollars that were made today. That's how the stock market works. That's how you putting your money into good growth stocks, mutual funds, index funds, exchange traded funds, and your money makes you money. That's why you dollar cost average in, you budget, you have your emergency fund, you can even have some play money sitting off to the side. You can do whatever you want when you're in control of your finances. That's why debt is bad. And that's why I talked about in my last video that I posted a few hours ago about Americans are carrying, record high household debt in 2024. Like, debt is not good. Debt is a problem. Debt keeps you where you are, and it can also be like quicksand. It just takes you under, and you feel as though, yeah, there you go. It makes you feel a certain type of way. And sometimes your feelings can keep you in a bad place. It can keep you in situations that you need to leave. But because you feel scared, fear, false evidence appearing real keeps you where you're at. It keeps you, in that lowly sinking place, in that negative place. Even though it's hurting you, you just stay there. You feel trapped. What was that movie called? What was it, Get Out? Where that guy was like trapped in his head. Either way, you understand what I'm saying. Okay, the article, because there's not a whole lot, it says the Federal Reserve's jumbo interest rate cut and signs of resilience in the U.S. economy have lifted confidence, helping stocks post three weekly wins in a row. The final trading day of the month and the quarter also came with profit taking and rebalancing. That's when the market was going down on Friday, and I think it even went down a little bit on some stocks on Thursday. People were taking profits. It's telling you. And if you think about, listen to my other videos where they were talking about how, say Thursday and Friday, they were saying some stocks weren't doing as well because maybe the Fed's rate cut was too much because it was 50 basis points and it was signaling the market and that's why, the prices were going down. And now they're saying the Federal Reserve's jumbo interest rate cut, which just happened on September 18th, and signs of resilience in the U.S. economy have lifted confidence. Confidence in who? See, it's so confusing. You were saying just one thing last week, and now you're saying something more positive today. That's why you have to do your own research. Read these articles, interpret it however you can, but don't just see the bad in a lot of this information, because when you just focus on all the negativity and the bad, again, it keeps you in place. It keeps you from making the decisions that need to be made in order to, invest your money. It keeps you from investing altogether. It keeps you making bad decisions, not totally doing your research and investing your money in a company that's not going to make you money, that doesn't allow your money to make money while you're sleeping. Like, I literally woke up this morning, checked my account, I saw it was red, and then I logged off. I got up, got ready for work. Now I'm doing this video. And then I clicked on the article, and it talked about how the stock market's doing well to end out the month. And then I looked at the stocks that were red at 4 o'clock this morning, my time, and now it's a little after 6 a.m., 2 hours later, those things have made money. So it's like, again, I was making money in my sleep, and that's what happens when you invest. The rich did not create this strategy or this monopolized system or way of being to lose their money. Can you lose money? Yes. But if you play it smartly and you're in the market 24 hours, not 24 hours, but every day that is open like I am, and you pay attention, you can do really well. And I've done well for myself over the last 4 years now that I've been investing. Yeah. Okay, so it says here, investors are now bracing for the September jobs report due out on Friday, which is seen as posing an important test for the recent rally. The pressing question is just how quickly the labor market is slowing as the market weighs whether the Fed acted aggressively to protect a healthy economy or to help a flailing one. Overall, the economy is in solid shape. We intend to use our tools to keep it there, Powell said in a speech before the National Association of Business Economics in Nashville, Tennessee. His remarks comes days ahead of the crucial monthly jobs report. Powell comments on not rushing the next round of rate decisions also lowered expectations of another jumbo cut. And that is all of my review for the stock market today, September 30th, which is a good thing. So now I have a book called The Simple Path to Wealth, and it's by J.L. Collins. And this is a book that my daughter actually told me about. And this is a book where this guy, J.L. Collins, talks about VTSAX, the Total Stock Market Index Fund, and how you can invest only into that fund and be a success, right? Get the book, Simple Path to Wealth. Can you see it? Yeah. So what I want to talk about, the first chapter is debt, the unacceptable burden. But I'm not going to read the whole chapter, but I want to read this part in regards to debt. Like, when you finally make the decision, I'm going to pay it off now. When you decide to pay off now, let's see what he says. What should you do? Okay, in the book it says, countless articles and books have been written about ridding yourself of debt. That is so true. If after reading this book, he says, if after reading this chapter you feel you need more guidance and help, by all means embrace them. Like, you have to, seek help, people. I don't understand why people have such a hard time asking for help. Well, no, I can see, because I used to be that person where I needed help, and then I just refused to ask for help. I kept getting in my own way. However, I could find other reasons or other things and people to blame for me not asking for help. And we're conditioned and trained to be that way based upon, the information that's fed to us on a day-to-day basis. If you're watching television, if you're listening to the radio, if you're, hearing negative conversations, I shouldn't say we, I would just say me. Then I started to think that I can't trust people. So therefore, when you don't feel as though you can trust people, or because I didn't feel as though I could trust people, I didn't ask for help. I figured the only person that I can trust is myself, so I needed to figure it out on my own, and trying to figure things out on your own only prolongs the problem or issue that you're going through. And I even had a conversation with someone yesterday. I could hear that they were in need, and I so badly wanted to ask them that they need help, but I told myself, don't. If someone needs help, then they need to ask for it. They have to learn. We have to learn how to get out of our own way. So let's finish this article, not article, but this couple of pages in this book. Okay. But he also says, be careful not to let the pursuit of the methods get in the way of doing. Because sometimes we can overthink things, and because we overthink, we just don't do anything at all. So the truth is, there is no easy way, but it is pretty simple. Here's what I would do. Make a list of all your debt. Eliminate all non-essential spending, and I mean all of it. Those routine $5 coffees, $20 dinners, $12 cocktails add up on a weekly basis. They do, people. I see people do it all the time on a weekly basis. This is what will free up the money you need to pour on the debt flames that are burning up your life. Rank your debts by interest rate. Pay the minimum required on all your debts, and then focus the rest of your available money on the one with the highest interest rate first. Once you've blown that one way, move on to the second highest and right on down the list. Dave Ramsey calls that the snowball effect. You just keep moving on down until you pay it all off. Okay, once you're done, send me a note and let me know. I'll be raising my glass in kudos, a salute to you. Here's what I would not do. I would not pay a service to help. This adds to your costs, and such credit counseling services have no magic formulas or techniques to make this less painful. You and only you can do the work. Exactly. Like, why do you need someone else to draft up all of your debt and figure out a way for you to pay it off? But sometimes you do. But he's saying here, figure it out. You would appreciate it even more. Also, I would not worry about trying to consolidate your loans into one place, not even for a lower interest rate. You are going to pay these puppies off fast and hard. When you create a plan, you will. And once they're gone, your interest rate will be 0. That's your goal, not merely taking your rate from 18% to 12%. Focus your time and attention there rather than on exploring clever strategy. Again, these consolidation of loans, it's a waste of money. Because here's the thing, when they consolidate your loan, right, they're also charging you a fee for consolidating your loan. Now, if your problem is financial and you're trying to pay off bills, why are you letting these people add another bill to your bills? It's all psychological. What they're doing is just making you feel a certain way by getting you to think that this is a good thing. However, you just created another bill. Create a plan, people. Okay, I would not pay off the smaller loans first for the psychological boost. That's what Dave Ramsey suggests. Dave Ramsey suggests that. He does not. Neither one are wrong. You figure out which one you would rather do. I know this is a key part of at least one popular strategy. And if it makes you more likely to stay the course, so be it. So he's saying here, the choice is yours as well. But as you'll learn reading further in this book, I'm not a fan of such crutches. Better to adapt yourself and your attitudes to the numbers than to adapt the strategies to your psychological comfort level. Again, the key word is psychological. Everything is psychological, people. Everything in this world is psychological. It's a monopoly. Either you learn how to play this game because it's a psychological one, or you continue to be played. It's a game. Okay, in short, nothing fancy. Just do the work and get it done. This is not going to be easy. Simple, yes. Easy, no. It is simple, but it's not easy because it's psychological. Because now you have to break down these walls that that have calcified in your mind. Okay, it will require you to rather dramatically adjust your lifestyle and spending to free up the money you need to direct toward your debt. Okay, it will require serious discipline to stay the course over the months, maybe years, it will take to eliminate your debt. Your debt. Okay, but here's the good news. And it really is awesomely good. Once you've ingrained that lower spending lifestyle and made diverting the excess cash to your debt, your path, you will have also created exactly the platform required to begin building your financial independence. And I totally agree. Because I lowered my expenses, I lived below my means, and I paid off my debt, I continue doing that. Even though I still live really good. I do what I want if I want to do it. But I don't do it just because I'm bored. No. I've created such a disciplined life, and now I'm using my money to build wealth and financial independence. Yes. Okay. Once the debt is gone, you will need only shift the money to investments, and that's exactly what I just said and what I am doing. And that's what you're going to do as well. That's why you're listening to this video. Okay. Where once you had the satisfaction of watching your debt diminish, you'll now have the joy of watching your wealth build. That is so true. Waste no time. Debt is a crisis that needs immediate attention. If you are currently in debt, paying it off is your top priority. Nothing else is more important. Look again at those people around you. For most, debt is simply a part of life, but it doesn't have to be for you. You weren't born to be a slave. He said that. Whew. This is interesting. And, at the time that he wrote this book, he said U.S. Americans carry a total debt burden of $12 trillion. And the article that I read yesterday said Americans are carrying $17.8 trillion. And he wrote this book, I think in 2011. So look at how much debt Americans have created since then. He captured $12 trillion this was written in 2016. So what happened? Because he actually wrote this book for his daughter. He had been an investor since 1975. In 2011, he wrote a series of letters to his daughter about money and investing and what had worked and what had kicked him in the ass. These morphed into a website that he created with his international audience and now famous stock series. And so the letters that he was writing to his daughter is what turned into this book. So in 2016, Americans' debt he captured was at $12 trillion. 8 years later, it's 17.8 trillion. Wow. Wow. That's interesting. Like he said, look at the people around you. Debt is like a normal part of life for them, but it doesn't have to be for you. You weren't born to be a slave, because Dave Ramsey says it all the time. When you're in debt, you are a slave to the lender. And just know that the source of wealth is within and around you. Yeah. Embrace it, people. we're just not taught this information at a young age. That's why it seems so foreign. And we're so inundated by negativity, whether it be through social media, news outlets, the radio. Like for a lot of people, we're living in our last days. It's so negative based. And it's that way for a reason. Like I said, it's a game. It's a monopoly. It's all about what you're choosing to focus on. And a lot of us started late. A lot of us don't start at all. The choice is yours. There you go. Everything's a choice. And luckily, well, not luckily, right now I'm in a place to make either good or bad decisions, and I choose to make good ones. And because of those choices, it's leading me on a path that a lot of people choose not to take. And that's why I'm on video talking about the things that I talk about, and not be held down or bound in negativity or debt like most people. I chose a different path. That's the thing. We're all given a choice. We just forget that we were given a choice because a lot of us are just following the path of others. We're not thinking. We don't think. We don't think. We don't mind our business. We don't mind our money business. So therefore, we just fall in a rut. And by the time we wake up out of that trance, time has flown by. And you're like, oh my goodness, I'm not prepared. Yeah, and a lot of people are not prepared. But I'm going to end this video because I have to go to work. All right, so you guys take care. Like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, hopefully you are thinking. Invest your money, people. Peace.